Ladies and gentlemen, good day and welcome to the CHEMCON Speciality Chemicals Limited Q2 FY21 earnings conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Ritesh Gupta from Ambit Capital. Thank you and over to you, sir.
Hi, good afternoon, everybody. Thanks for joining us on this call. Today we have with us management of CHEMCON, represented by Mr. Kamal Agarwal, Chairman and MD, Mr. Navdeep Goyal, Deputy Managing Director, Mr. Rajesh Gandhi, Director and CFO, to discuss Q2 FY21 results. I'll now hand over the call to Mr. Kamal Agarwal for his opening remarks.
Thank you, Ritesh. Good evening, everybody. On behalf of CHEMCON Speciality Chemicals Limited, I extend a warm welcome to everyone for joining us on the earnings calls today. On this call, we have been joined by the Deputy Managing Director, Mr. Navdeep Goyal, our Chief Financial Officer, Mr. Rajesh Gandhi, and our SGA team, our Investor Relationship Advisors. We hope you and your near ones are healthy and safe in this environment. Let me begin by thanking to our shareholders for the response to our recent IPO. We continue to strengthen the brand equity of CHEMCON Speciality Chemicals and strongly believe we have a huge potential, huge opportunity in hand. Since some of you may be hearing us for the first time today, let me give you a quick snapshot of the company and then our team will walk through the operational and the financial performances. We are manufacturers of specialized chemicals such as HMDS, that is hexamethyl disilazone, CMIC, that is chloromethyl isopropyl carbonate, and other similar products. These products are mainly used in the pharmaceutical industries as a value-added intermediate. We categorize both these chemicals as specialty chemicals for pharmaceutical industry. We also produce inorganic bromides, namely you can say calcium bromide, zinc bromide, sodium bromide and things. They are mainly used as completion fluids in the oil field industry, also known as oil field completion chemicals. Let us highlight more on this product segment. HMDS, as I said, is utilized in the pharmaceutical industry as a silylating agent in the process of manufacture of ARVs and penicillin group medicines. HMDS is also used in semiconductor and electronic industries and also in rubber industries. Semiconductor industry for the coatings and rubber industry for manufacture of high value pharmaceutical rubbers particularly, not all the rubbers. In the CY19, we were the only manufacturer of HMDS in India and the third largest manufacturers of HMDS in the world. Globally, we have a market share of nearly 10%. And as far as the revenues are concerned, our company revenues gets to the tune of about 50% comes from HMDS. And out of the 50%, again, 85% are contributed from the domestic market and 15% from the. On to the next product, main product, that is CMIC, chloromethyl isopropyl carbonate, is an antiviral drug intermediate. It is particularly used for tenofovir, that is an anti-AIDS drug, anti-hepatitis B drug. The downstream products of CMIC, as I said, is tenofovir. It is a Gilead Corporation US, and tenofovir and its combination uses this CMIC. As per CY19, we were the largest manufacturer of CMIC in India, and we were the second largest of manufacturers of CMIC in the world in terms of production as well as in terms of the capacity. Both the way, even the productions we were the largest, second largest in the world. During the current calendar year, we shall become the largest of CMIC in the world by way of our production, they are going ahead. We are going ahead with larger productions of the same. CMIC is expected to contribute about 25% of the total revenue of CHEMCON, and 90% of this would be contributed from the domestic market and about 10% from the international market. Globally, our market share is expected to reach to about 25% of CMIC. In respect to the oilfield chemicals, as everyone is aware, the oil prices being lower, our products are being used as capex, as capital equipment, something like. They are used in borewell after the drilling has been finished as a completion chemical to control the downhole pressure prior to and on completion of the well. Currently, we manufacture a range of inorganic bromides, namely calcium bromide, zinc bromide, and sodium bromide. As we are the only manufacturers of zinc bromide and the largest manufacturer of calcium bromide in India in terms of production. Globally, our market share stands to the tune of about 4% across all bromides in total. In FY20, oil well completion chemicals contributed about 33% total revenues, of which 88% were contributed from the international market and balance about 12% from the domestic market. Exports, we have the presence in the United States. We have our customers based at US, Italy, South Korea, Germany, China, Japan, UAE, Serbia, Russia, Spain, Thailand, and Malaysia, and other locations we are just opening up. Our manufacturing facilities are ISO 9001 and 14001 certified for the manufacture and supply of pharmaceutical intermediates, that is salains and oilfield chemicals. Our facility is located at Manjusar. Manjusar is about 20 kilometers from Vadodara in Gujarat. Currently, we have 7 operational plants. Plant number 8 and 9 are under installation. We also have an in-house laboratory and we are self-reliant in respect to the power and steam and other utilities also. In addition to the operational plants, we have started already the construction of the 2 additional plants P8 and P9 within the enhanced premises of the manufacturing facility. The additional plants are to be used for the manufacturing of chemicals, again in the same line of activity as pharmaceutical intermediates. Post completion of the expansion, volumetric reactor capacities will reach to 625 KL against our present capacities of 375 KL. The IPO proceeds were taken by the company for this purpose and it is under implementation. Commissioning of the 2 new plants, that is plant P2 and plant P7, this was done during the current financial year, and we have increased our capacities of HMDS. Plant P7 is a dedicated or a mix of with the interchangeability facilities for manufacture of 1800 tons of HMDS. Plant 2 has facility, it is a dedicated plant for HMDS, but it has the facility to manufacture high purity HMDS for the electronic industry as well as for the rubber industries. We have executed the first sale of the new products, that is 4-chloro-butyryl chloride, in the current financial year 21, which are widely used in pharmaceutical and agrochemical industries. And we are in the process of commencing the production of the new product 2,5-DHT, which is again a pharmaceutical industry intermediate. As notice of everyone that during the IPO period, we have acquired 22,000 m square of land, adjacent land to our existing facility, that is extension of the boundary. And in the past we had 29,000 square meters of land. Now the total land available to the company is 51,000 square meters. The plant number P8 and P9 are upcoming in the new land, that is 22,000 square piece that has been taken by the company in recent. The company also received approvals of 44 new products, which includes the 9 existing ones. We got the government clearances for them, and with our production capacities of volumes, we can increase from 2,500 metric tons per month to 10,600 metric tons per month. The operations of the company were impacted due to the COVID-19 lockdown during Q1 21. With the unlocking taking place, we are back on track and gathered momentum for Q2 21. Pharma chemical products, HMDS and CMIC reported a healthy growth for the quarter. In case of CMIC, there has been a huge volume growth coupled with the price increase on year-to-year basis. For HMDS, the volume has remained stable with a slight decrease in the price on year-on-year basis. Our profitability on absolute per ton basis of HMDS remains stable. Now I would like to Rajesh Gandhi, the CFO, to walk through all the financial performance of the company. Over to you, Rajesh.
Thank you, Mr. Agarwal. Good evening, everyone. On our first earning call, Q2 21 has been a reasonable quarter for us as we continued to sustain a high growth trajectory from specialty chemicals of pharma industries and has witnessed marginal demand recovery from inorganic bromides. Q2 21 total revenue for the quarter stood at 61.5 crores. Of the total revenue, domestic market contributes around 61% at Rs 37.8 crores. Percent of revenue, Rs 23.6 crores, were contributed by export business. Our domestic market declined by 23%, whereas international revenue grew up by 46% on YOY basis. Production volume 221 was at 17,088 metric ton as compared to 2,444 metric ton same period last year. Decline was preliminary due to volume decline in bromide production. Segment-wise revenue are as follows. HMDS revenue stood at Rs 30.2 crores from the quarter. CMIC revenue stood at 22.9 crores from the quarter. Oil well completion revenue stood at Rs 6.6 crores for the quarter. EBITDA 3.3% to Rs 23.3 crores in Q2 financial year 21 as comparison to Rs 19.5 crores in Q2 20. Net profit for the quarter grew up by 14.4% at Rs 15.6 crores in Q2 21 as compared to Rs 13.6 crores in corresponding period last year. H1 financial year 21 total revenue for the H1 stood at Rs 107.2 crores. Revenue from domestic market stood at Rs 71.2 crores from H1 21, whereas balance Rs 36.1 crore were contributed by export market. EBITDA stood at Rs 37.4 crores, whereas net profit stood at Rs 24.4 crores for H1 21. Production volume stood at 2,765 metric ton for H1 21. Our capex for H1 21 stood at 5.06 crores excluding land. Our total debt stood at 56.84 crore and debt to equity stood at 0.18 times. With this, I conclude the presentation and open the floor for further discussion.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priyanka Singh from Atidan Securities. Please go ahead.
Yeah, good afternoon, sir. I have couple of questions. The first one would be, what are the market opportunities for our new products, DHT and CBC?
The new product CBC is a commercial product. It is manufactured by a couple of other manufacturers also. We have a small capacity of 100 tons, whereas the market size stands at about 7,000 tons. 100 tons per month, that is 1,200 tons per year. The market size from India. However, we have the existing customers who use the product, and we have good relationship. We have good entry to that. In respect to the other product 2,5-DHT, we have put up the plant for 1,200 tons per year again, and this product is not manufactured in India. About 2,500 tons of this product is imported into India, so it is a net import product. We will be taking over the market as a replacement of the imports. So that stands as the future of these two new products.
Okay, that was helpful. And also, what are the key properties of our products, and why do pharma companies use these products?
The basic products are, say, HMDS is a silylating agent, and without the silylating agent, the group cannot be protected or the chemistry cannot proceed. As such, it is a compulsory chemical to be used in the manufacture of penicillin-based and ARVs. So it is a mandatory product required to protect the chemicals while processing. In respect to CMIC, it is a side chain of the product. So it is half molecule of the product. So it is a compulsory one which forms a part of the medicine. So these are the two principal usages. In respect to 2,5-DHT, it stands identical to CMIC.
Okay, and on the financial side, what kind of EBITDA per ton are sustainable among these three segments?
The EBITDA per ton is in line. It is stable since last 1.5 years, 2 years, and it is proceeding. We anticipate the same EBITDA in the coming time also. I won't like to share the figures on that, but during the IPO period or the DRHT or RHP, we have given all these figures. You can please refer to that. It is stable. There's no change in that, and we do not project any changes in that.
Okay, that was quite helpful. Thank you.
Welcome.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Ashwini Agarwal from Ashmore Investment. Please go ahead.
Hi, good afternoon, sir. I had a couple of questions relating to the balance sheet as of 30th September 2020. So, these lines relating to other financial assets and other financial liabilities and corresponding entries that I see in the cash flow statement. So, some of these don't. I'm not able to tally for whatever reason. So, for example, if you look at your statement of assets and liabilities, other financial assets have barely moved in the balance sheet side, but in the cash flow, you show a significant change in other current financial assets to the tune of about 17 crores. Similarly, if you look at other current financial liabilities, okay, they have gone from 4.5 crores to 192 crores, but the corresponding entry in cash flow statement is somewhat, lower. So I'm not able to understand this. Could you explain as to what these items are and why they're moving so much?
Okay. Good noon, dear. This 192 crore, I'm taking the second question first. The 192 crore liability, which has moved to
4.5 crores.
4.5 crore. That is principally the liability of the OFS, the sale of that the amounts were received, they were lying in the bank account and they were supposed to be given to the OFS, the selling shareholders. So that 153 crore plus the cost for the cost payable to the MBIT, the BRLMs and other the cost involved in the IPO, that amount was lying in the bank. So that is a liability. So that is how it has increased from 4.5 crore to 192 crore.
Okay, I got it because those appear in the investing activities now.
Right. And in respect to the other question, can you repeat, please?
So, what are the other financial assets and why have they increased so much? Actually, they've increased by about 18 crores. It's not much actually. I'm sorry about that. I misread that number.
Yeah, just a minute. Let me have a look on that. I'm not clear on that. Can you take this matter separately?
Yeah. Yes, I will. Okay. All right. Thank you so much.
You can take it with the investment relationship people. SGA will respond you to this.
Okay. Thank you so much.
Thanks, dear.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1. The next question is from the line of Nitin Baricha from Sequent Investment. Please go ahead.
Hi, good evening, sir. Thanks for the opportunity. I have a couple of questions. So my first question is on the margin side. We have seen a superb improvement on margin on this quarter. So are these margins sustainable on the second half of this year? Maybe what kind of margin is sustainable?
Good evening, dear. The margins are in line. They have not improved. In fact, the sale prices have come down a little. However, CHEMCON works on per kg margin, not on revenue percentage margin. As such, it looks as the price come down, but the margins are retained, so it becomes higher percentage. We do not feel we have got any additional margins. On per kg margins, they are been sustained. They are identical since more than 1.5 years, and we project they will remain the same.
Okay. So it will remain the same. Okay. And my second question is on the capex side. So what amount we are spending on these two plants, and what will be the asset tier on this?
The capex of 41 crore was taken from by the company by way of IPO. Mm-hmm. The plant number 8, plant number 9, along with the other utilities and other plants, it will take away the entire amount of 41 crore. That would be the input. In respect to the capex to turnover ratio, as usual, it will be around 3.5 to 4 times.
3.5 to 4 times on the amount of 41 crore. We are spending total 41 crore. Is that right?
Yeah, 41 crore.
Okay. I have few questions. I'll get back in the queue, sir. Thank you.
Oh, welcome. Always welcome.
Thank you. The next question is from the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, one question I had about your past financials. If you have the gross block number for either 2016 or 17, and last 4 years, how much capex has happened, just to get a sense how much capacity we have added over the last 4-5 years. And my second question was, sir, that was a clarification. You mentioned that the market for the CBC is 7,000 tons per month or per year?
Per year.
Per year. Fine, sir. And one clarification, sir. In the press release that you have come out with, that's page number 3, last paragraph, the 44 products. So could you describe what these products are going to be like? Which chemistries are you catering to in these products? Are they very closely related to your existing existing portfolio in terms of chemistries, or these are different chemistries? And you require the nature of this expansion. Would you have like separate reactors for everyone, or you'll be like changing the batches? That would be the question, sir.
Okay. In respect to the capacities increase, we have increased from 17 to 21, if we see. It is fourfold increase of HMDS.
Okay.
And fourfold increase in CMIC.
Right.
Identically. And we are further increasing the CMIC capacities by way of adding the plant number 8 and 9. Plant number 8 and 9 will be having multiple products. These 44 products are in line with the activities that we are going ahead. The chemistry is minor changes are there. However, the applications or the activity of working remains the same. We are manufacturing specialty chemicals, and all these chemicals, whatever we have taken the approval, falls within the line. We have the line of activity of working with pharmaceutical industries in India and overseas. We will continue to do that. The products are in relation to that.
Got it. May I ask one more question, sir?
Yeah, welcome.
Sir, in any product that you're making, generally how many steps are involved and what are your major raw materials? Are you starting from very simple materials like, let's say, benzene or toluene? I do not know exactly the pathways that you actually use, but are you going back to those basic level chemicals and then finally making CBC, DHT, and the other two molecules, or use the 3 or 4 step manufacturer?
We do not have a startup from the base chemicals. Our intermediates or our startup chemistry is from half mole position, and we have got the products with single step, 2 step, 4 step, all differently. Say for example, if it is calcium bromide, it is a 2-step, HMDS is a 3-step, and CMIC is again a 3-step product. CBC or DHT stands as a 4-step product. So likewise, different products have got the different working.
Perfect, sir. Thank you very much, sir. All the best, sir.
Same reactor for the different purpose, yes. When we say it is a multi-product plant or the multi-purpose plant, we have to utilize the very same vessels for the new products.
Perfect, sir. Thank you very much for answering my questions. All the best, sir.
Well, welcome. Always welcome.
Thank you. Before we take the next question, a reminder to the participants again, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Arpit Kapoor from IDFC Securities. Please go ahead.
Yeah, hi. So, first question is on the oil well products. So, when your press release also mentioned that you are seeing some bit of production starting from October. So, if you can talk some more about how do you see the ramp up happening in the oil well chemicals, let's say for the second half of this year and for next year, if you can throw some more color there.
Well, good evening to you. Oil well chemicals, the first half year has proved to be poor as far as the prices of the oil are concerned, because they went down drastically. Our chemicals are used as capital equipment for them. Say after doing the oil well drilling, it is used as one time for the pressure balancing. So this is a chemical utilized as a capex. As the prices went down below the cost of manufacture or below $40, the new oil wells were not coming up. But now with the recent developments in the last 1.5 months or 2 months, the new oil well drillings have commenced. We always were holding purchase orders from people like Halliburton and people like Schlumberger and this sort of major customers of ours. The supplies were under hold. In the recent last 1.5 months, 2 months, the supplies have been initiated. The supplies have been cleared. The product has started moving. We are on 100% production now. So that is how we are moving ahead. We project, well, it won't be up to the mark compared to the last year, but major volumes we will be able to cover up. However, this gap has been filled by the other products like HMDS and CMIC, which stands for the volume as well as for value addition. Both the places, CMIC is giving a better advantage.
Right. So incrementally, of the current capex plan that we are embarking on, we don't foresee any capacity expansion to happen in the oil well chemical space, given the fact that we are yet to utilize the capacities to the fullest?
The oil well chemical, we have a capacity of 14,400 tons, and to the max we have utilized even up to 8,000 and odd figure. So we always stand having additional capacities available to us, and we do not have any plans of expanding that.
Sure. And sir, my second question is on the geographical split. So if I look at it in this quarter, current quarter, our export sales have % of our sales contribution has come from exports, which has been traditionally has been somewhere around 25, 28 odd %. So if you can throw some more color as to which geographies or which products, where have we gained, where is this export sales coming from, and how sticky is this number going to be going forward as well?
You see, the bromide sales has come from UAE. That is 6.6 crore for the quarter, oilfield chemicals. And the other HMDS and CMIC, we do not have exports during this period. However, HMDS has moved to different parts of the globe.
So that would not have been there previous.
No, in the quarter Q1 we were not having that.
Yeah, so which is where that delta that has come in this current quarter.
Yeah.
And so you see the traction continuing going forward as well?
Yes, sure, very well.
Okay. And last bit, if you can throw in terms of realizations, how is export realization? Are there any difference between export realizations compared to domestic realizations?
We are a substitute.
Excuse me, sir, I'm sorry to interrupt, but we are unable to hear you, members of the management. Requesting participants to please stay online. We are just trying to reconnect the chairperson back to the conference. Requesting you all to please stay online. Requesting participants to please stay online. We are just trying to reconnect the management back to the call. Requesting you all to please stay online. Ladies and gentlemen, thank you for patiently holding the line. We have the management reconnected. Over to you, sir. The question is from the line of Mr. Arpit Kapoor. Please go ahead.
Yes, dear. Can we continue on the question, please?
Yeah, sir. So I was asking about the realizations for the export market. Are they any different from domestic market?
Okay. The principal policy of CHEMCON is that the export realization should be better than the domestic one. Otherwise, not to export. So definitely the export realizations are better, because there we have to compete internationally from the Chinese manufacturers.
Okay. And sir, last bit, so when we are expanding the capacity, is there any color that you can give on how much would it be, let's say, for domestic supplying, and how much you envisage would go for exports?
Exports, we are trying to concentrate on different sector of application other than pharmaceutical. So we hope we will, from the present around 15% of the product, we will be able to take it to more than 25%.
Okay. All the best, sir, and I'll get back. Thanks.
Thanks, dear.
Thank you. The next question is from the line of Manish Poddar from Nippon AIF. Please go ahead.
Yeah. Hi, sir. Just had two questions. One was data keeping. So would you be able to help me with what were the exit prices, let's say, for HMDS now as on October 20?
October 20, the HMDS average realization is about 470 rupees a kg.
Okay. Would you be able to help me, our working capital cycle is, in the first half. So what are the reasons for the same, and what is the steady number to expect here?
See, the outstanding of company during the period of 30th September, if I talk of the today, it has come down to about 85 crores. So more than 25 crores out of that has been recovered, or more than 20% has been recovered. There was a delay of payments from our customers, which resulted into increase of receivable days. The things have been sorted out, the flow has been online, and it has been taken care of.
So what should be the, let's say, if I look at your cash conversion cycle, what should be a sustainable number of here?
Cash conversion cycle.
Let's say inventory plus debtor, minus the payable days for you.
We will be able to achieve around 2 to 2.1 cycles in a year.
Okay. Thanks.
Welcome.
Thank you. The next question is from the line of Ashwin Agarwal from Ashmore Investment. Please go ahead.
Sir, in your press release, you've spoken about commissioning plants P7 and P2 and launch of new products 4-CBC and 2,5-DHT. And also, your commentary seems to suggest that the oil well chemicals should see a rebound in the second half. So how should we think about second half? How quickly will production in P7, P2, 4-CBC, 2,5-DHT will ramp up? Or this is something that's going to take longer? If you could provide us with some sort of perspective of how you see the next 18 months rolling out.
The plant number P2 is dedicated for HMDS. The P7 is a flexible plant. We can make CMIC in that, we can make 4-CBC, or we can make 2,5-DHT, or we can make HMDS in that. That is the flexibility available with us. Say in present era, the CMIC demand being huge and the value addition being much better compared to even the 4-CBC or with 2,5-DHT, if we compare with that. So in the present era, we are utilizing that expanded capacities for the existing product CMIC. We had the capacity of about 1,800 tons of CMIC. We are trying to take a production of more than 2,200 tons in the current financial year, which includes the COVID period Q1 loss of productions also. So the contributions been better, the market demands been much higher. So that flexibility we are attempting to utilize. We work on the per kg margin, we work on the value addition basis. We are not concentrating much on the new products as on priority basis. The priority stands on the business, the value additions, the bottom line. So I cannot say unless we start up the plant number 8 and 9 and utilize the CMIC over there, we will be starting major productions in 2,5-DHT.
Sir, you mentioned 2,100 tons of CMIC for the year. What were these numbers in tonnage terms for Q1 and Q2 this year?
One sec. I'll give you the Q1 and Q2 numbers. CMIC in Q1 stands at 306 tons.
Mm-hmm.
We have done 784 tons Last year, the total production of CMIC was 807 tons. So against a full year of 807, we have already done 784 in H1.
784 in H1.
Yeah.
Because you blanked out for a bit in the middle, so Q2 would be 784 minus 306. So whatever, 470 odd tons.
Q2 was 478.
478. Okay. Okay, and against this, you expect therefore the second half to be well over 1200 odd tons,
yes.
Close to 1200 tons.
Be more than 1200 tons.
More than 1200 tons, and this number was 807 tons.
You see, the largest manufacturer of CMIC in the globe had a production of 1,300 tons. As I said in my speech, we will be becoming the largest manufacturer. That includes this volume. That is based on this volume.
And second half, should we expect some improvement in the oil well bromides as well? And that capacity is separate, right? That is not fungible with the, or that is not flexible like your P7 or P2 plant, sorry, where you can make anything.
P7 plant, I can make multiple things. P2 is a dedicated plant. Well, calcium bromide is a dedicated plant, or all the bromide. It is a dedicated plant. No fungibility is possible in that.
So that, if there is a recovery, that would also contribute to second half revenues.
100%, because we do not have any almost negligible contribution in the H1.
And what's the order book looking like, sir?
Order book, we have about 2.5 months order book for that.
2.5 months of how many tons? Or because that would give us a sense.
I won't be able to give you that figure, so I'm sorry for that.
Okay. So this launch of 4 CBC and 25 DHT, while it's a technical launch, in the near future you don't anticipate making them because you would like to use your entire capacity for CMIC, because CMIC is more profitable and obviously where the demand is very strong. Would that be the correct way for me to think about it?
No, not so. For CBC, we are on the verge of launching. 25 DHT, we are delaying a bit.
Okay. Okay. But I thought the P7 you will use mostly to make CMIC.
No, mostly the 25 DHT area that we have converted to CMIC. That we are utilizing over there. For CBC, we will be continuing to launch in the Q3 or maybe to the maximum of Q4.
And what revenue potential or...
We have already started supplying CBC.
Sir, what kind of revenue potential can this have, CBC?
For CBC, initially you can consider about 50 tons a month as the production. And 300 rupees a kg is the approximate pricing for that.
Okay, and EBITDA margins would be similar in percentage terms as compared to the company, or how would you think, how should we think about that?
There are multiple manufacturers for the same. As I told, there is a market of about 7,000 tons. So that is a competitive product. We won't be having margins in line with CMIC or with HMDS, but well, there would be a handsome margin.
Okay. All right. So thank you and all the best.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Sri Hari from PCS Securities. Please go ahead.
Yeah, thanks for the opportunity. In the press release, you have mentioned about quadrupling of your capacity from around 2,500 metric tons to 10,000 metric tons. So is this a new project altogether, or is this the 41 crore venture that you're talking about?
You see, the capacity expansion permissions have been availed. With the expanded capacities by adding the 2 plants with 41 crore investments, plant number 8 and 9, we won't be able to utilize the 100% of the license capacity. We have the space for making the plant number 10 and 11 also within the newly added premises. So that will remain as a future expansion possibilities. However, the licensing which are been already availed for that.
Okay, so it includes the plant, the proposed plant tenant level.
Yeah.
Yeah. So then without, what is the enhanced capacity right now if you add 8 and 9?
8 and 9 are the multi-product plants, so it will have fungible capacities for many products. We can take a call on the basis of the products that we manufacture. So we have worked out the reactor volume capacity, the processing capacity, instead of the product-wise capacity.
To get an idea, currently you're at 2,500. So if you add 8 and 9, by how much percentage would that increase?
So you see, it depends upon the product that we manufacture. If it is a multi-step product, the volumetric capacity will be utilized in a different way. Output would be different. If it is a single-step product, the output volumes would be different. So it is better not to relate the two.
Okay. So then what would be the optimal turnover if, let's say, 8 and 9 are fully on stream?
What would be our?
What would be the optimal turnover, top line?
Top line will be dependent upon the products that we select, sir.
Yeah, but we won't be able to factor that in. Can you give us some kind of an idea? What is the kind of incremental?
I agree. Instead of revenues, if we talk in terms of the PAT or the bottom line, that would be a better one because we are targeting to reach about 100 crores in the coming couple of years as the bottom line, as the PAT line. We work on that.
Okay, I think you mentioned that for the 41 crores, the asset turn would be around 3.5 to 4 times.
Yeah, that would be 3.5 to 4 times.
Okay. And then for unit 10 and 11, what is the kind of outlay you expect there?
We do not have any plans for that as on date. The moment we will come out with any plans, we will update the investor.
Okay. In the IPO document, you had mentioned about taking benefit of the PLI scheme. So has any plan been worked out there?
We have mentioned taking the benefit of
PLI scheme, productivity linked incentive scheme.
No, I'm not clear on that.
For HMDs, I think you are planning to scale it up. There is a particular PLI scheme which the government has floated, where incentives will be given for.
And in the IPO, we have never mentioned that we will be taking.
Okay, I recollect having heard that. Okay, so fine. Basically, you have no plans of
no, we do not.
Benefits in the scheme.
We do not.
Okay, fine. Okay, thank you.
Thank you. The next question is from the line of Ayush Abroy from Victor Delta. Please go ahead.
Yeah, thank you, sir, for giving this opportunity. So I have a question regarding the oilware industry. So I have observed that why is there degrowth in the oilware chemical industry in the last 2 years, and what is the current scenario in the industry?
You see, the degrowth is because we are manufacturing the chemicals that are used as oil well drilling, post-drilling. It is completion. So it is not a consumable, it is a capital equipment, one-time usage in the new oil well. So as the prices of oil will go down, the new projects will not come up, the new oil well drills will not come up. And that is the reason that has happened. I do not have the answer why the oil prices have gone down.
Okay. And what is the current scenario in the industry?
The scenario is that it has started moving again. The new oil wells have started drilling up, and our products have started moving ahead.
Okay. So in FY19, we have clocked revenue around 100 crores. So when do we expect a similar kind of business momentum?
I do not have any comments on that for the reason that is directly in relation to the oil well prices. If the oil well prices crosses $70-$80, well, we can achieve more than 100 crores. And if that goes to about $30, we may not be able to achieve even in line with what we have done.
Okay. So can you explain the key difference between HMDS and pure HMDS?
Fair. Pure HMDS, when we say it is for the electronic applications, which is a very high purity HMDS. And when we say HMDS, it is a standard 99% HMDS utilized in respect to the pharmaceutical intermediates.
Okay. And another question is that what is our current capacity across each segment, like overall utilization and segment-wise utilization?
We have the current capacity of 1800 tons of CMIC and about 4200 tons of HMDS.
Okay. That's all for my side. Thank you.
Welcome.
Thank you. The next question is from the line of Ashwini Agarwal from Ashmore. Please go ahead.
Sir, thank you once again for taking my question. Sir, I just wanted to understand your capex plan between October and March of this year and what you think would be the capex over the next two financial years. How have you thought about those numbers?
October to March, within the financial year, we have the target to start at least plant number 8 out of the plant number 8 and 9.
Okay.
So more than 50% of the capex we will be doing within the next 6 months, and we intend to start as soon as possible the plant number 8. We had given the timeline as 18 months required to deploy the finance for capex of 41 odd crores. However, we are trying to implement it faster. We have phased out into phase 1 and phase 2. Plant number 8 along with the utilities, we are trying to take up as fast as possible to be followed with plant number 9. Utilized within the next 6 months.
So, sorry sir, you blanked out in the middle. You were saying that plant number 9 would be in the following 6 months.
No, plant number 8 and 9, two plants we are building up new plants. Plant number 8 we intend to complete within the next 6 months.
By March, correct. Then that would take up about 50% of the 41 crores that you've outlined as capex for plant 8 and 9 together, correct?
Sure.
And the balance would happen in the following 6 months or so?
Yeah, should be in the following 6 months.
Okay. And thereafter you will start working on your plants 10 and 11, etc., etc.
10 and 11 will depend upon the future policy of the company.
Okay. Okay. So there's no visibility to the capex beyond 8 and 9 right now.
My dear, if it is not the visibility, we would not have acquired the land for that. We have already acquired the land, so you can understand there is a clean visibility available. However, we are not commenting anything on that.
Okay, fair enough. Okay, all right, sir. Thank you so much.
Welcome, dear.
Thank you. The next question is from the line of Manish Bodar from Nippon AIF. Please go ahead.
Yeah. Hi, sir. Just wanted to understand, is there any seasonality in the business as such? Or should we look at numbers, let's say, on QOQ basis going ahead?
I'm not clear on your question. Can you please repeat?
No, so where I'm coming across is if you look at your last year's second half, your second half EBITDA is roughly at about 27 odd crores.
Yeah.
And the EBITDA which you have clocked in this quarter is roughly around 23 crores. So just trying to understand, given that this is the first quarter of reporting. So is there any seasonality in your quarterly numbers, or one can look at the company, or when you're looking at the business internally, do you look at the business from a QOQ perspective? That in this quarter, let's say clock 23 crores. What is the when we're looking at the next quarter, we are looking at a similar number going ahead. So do we look at numbers on a YOY basis or on a QOQ basis internally? Is what I'm trying to gauge.
Okay. We do not have any seasonal products. All the products are stable all the year, throughout the year. Second, we are substituting the imports. Even today, if we see, more than 50% of the consumption of HMDS is from imports. 40% of consumption of CMIC is from imports. So we are just substituting that. So whatever volumes we are creating, we are able to sell it in the domestic market also. In respect to the growth in EBITDA, that is from 20.27 to 23.46. That is principally because of the volumes. We work on volume per kg margins on the volume basis. We do not work on value base, revenue percentage basis. So as the volumes will grow, the EBITDA or the contribution or the PAT or everything will grow, except the revenue. The revenue is market driven based on the prices.
Yes,
And
got it.
CHEMCON works on the value addition basis. CHEMCON do not work on revenue percentage basis.
So, got it. So it would be right to infer that incrementally, as and when the domestic business and the oil well chemical business stabilizes, the EBITDA which we have done in this quarter is kind of the base EBITDA which one should work with.
It will be giving an additional revenue from the oil field chemicals. So when there is an additional revenue, there is an additional quantity, there is an additional contribution. So that contribution will be added to the EBITDA.
Got it, sir. Great. Thanks.
Welcome, dear. Welcome.
Thank you. The next question is from the line of Vaibhav Chakote from Ashmore. Please go ahead.
Thanks. Can you please give segment-wise revenue breakup for 1H?
I won't be able to give you the segment-wise breakup for individual. You are asking for the H1 or you are asking for 6.1 or you are asking the projection?
So I'm asking product-wise revenue breakup like CMIC, HMDS, revenue breakup for 1H.
For H1 we have the separated.
I am giving the answer.
Yeah.
Just a minute. HMDS revenue stood at 30.2 crores in quarter. CMIC 22.9 crores for the quarter, and oil well is 6.6 crore for the quarter.
And for first half of the year?
H1
we have not ready with us as on time.
SGA will share you that.
SGS will be share with you H1 figure also.
Okay.
Thank you. I have the volume figures. I do not have the H1 revenue figures on individual product basis.
Got it. Thank you.
SGA will share you.
Thank you. Well, ladies and gentlemen, that was the last question. To hand the conference back to the management for their closing comments. Over to you also for a closing comment.
Yeah. Friends, India is currently a net importer of both HMDS and CMIC with about 40% and 62% respectively. So even post productions of such high volumes of HMDS, still we remain net importer of 40%. Hence, there is an ample room for the import substitution with our capacity, strength, and technical expertise. We are well equipped to garner opportunities. We are penetrating the new clients and bring in more value additions for them. Our appetite for new products, new end application opportunities with the existing products, new capacity expansions, new geographic markets, ongoing cost efficiencies will make us well diversified organization. With this, I conclude the call. If you have any queries, please get in touch with SGA, our investor relationship advisors. Thank you everyone for joining us today on this earnings call. Wishing you all festive greetings of Happy Diwali. Thank you.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you all for joining. You may now disconnect your lines.